Hey yo, good evening viewers across the globe. I'm your host Tyler and welcome to the cryptocurrency channel. Some love, some hate, but most can't take their eyes off of. Well, let me strike a pose for you haters to stare at because it's time for Chico Crypto. A few days ago I talked about the next bull run and where we may be in regards to timing for the next one. According to Michael B. Casey, who predicted the last parabolic bull bubble, we just went through a Gartner hype cycle and should be settling into the low end of the crash and what he likes to call the boring low. How long is the boring low going to last this time around? As we can see from the June 2011 bubble, the boring low lasted between 7 to 8 months, from November 2011 to around May or June 2012, leading up to the volatilic rise and then another bubble. Now, looking at the November 2013 Bitcoin bubble and the time after, that boring low lasted about a year, from January 2015 to January 2016. Then the phase called the volatilic rise began and speculative investment began pouring in, leading to a correct prediction by Michael with another bubble in December 2017. What I like to look at to remind me of how irrational people are during the crashes and near the boring low is old archived Reddit posts. This post was made over 4 years ago, during January of 2015. This was when Bitcoin had one of its final dips before entering its boring low. Just look at the comments. People explaining they bought in at high numbers like $731, with many people commenting at the high positions they bought into. Irrational people saying, I can't wait for Bitcoin to drop to 1 cent. And finally, someone says, below $100 soon? Does this all sound very similar to what is going on right now with most discussions over Reddit and crypto Twitter? If most of these people held, they would be ecstatic with their returns, even now, which I'm sure some did hold, but a good majority got impatient and sold for losses. Now, let's assume we have hit the bottom this time around. This would mean accumulation time based on previous history and bubble events. Like I mentioned, the bubbles seem to get spread out further based on time, and this leads to longer times of accumulation in the boring lows. Based on previous performance, I would guess this boring low is going to last for another year, at least into the beginning of 2020. Then another volatilic rise begins, which could last longer than any of the other rises in history. A year is a good amount of time, and with rapid developments in cryptocurrency, many amazing things could happen. With every last previous bubble except the last one, Bitcoin was the main cryptocurrency that everyone paid attention to. But now there is a major competitor on its heels, and I'm talking about Ethereum. Today, I would like to discuss both projects, Bitcoin and Ethereum, and which project could gain larger percentages of market share come next volatilic rise and impending parabolic bull run bubble. Let's begin with Bitcoin and what it has in store. Let's assume the crypto markets enter into a sideways market until 2020, but after January, the markets begin to turn for the better, stair-stepping its way up past 10K. In May of 2020, something big is coming for Bitcoin, the Bitcoin Halvening. This means the coin reward for mining Bitcoin blocks will drop from 12.5 Bitcoin to 6.25 Bitcoin per block, or from 1,800 Bitcoins mined per year to just 900 Bitcoins mined per year. In anticipation for the event, we could see the volatilic rise for Bitcoin begin just before 2020, or right when we cross that mark. This is a big event for Bitcoin because past halvenings have been the trigger for the next Gartner hype cycle. But this one is especially significant because annual Bitcoin inflation will drop to just 1.8%. This is the point in time when Bitcoin becomes less inflationary than central banks' annual rate target of 2%. But let's talk about Ethereum and its inflation. Ethereum just had a non-contentious hard fork called Constantinople, and a major update to the protocol came in the form of issuance reductions for mining rewards, from 3 Ethereum per block to 2 Ethereum per block. Current Bitcoin inflation is at about 3.75% per year. With Ethereum's drop in issuance, current inflation is around 4.25% per year. There is talks within the Ethereum community that issuance will be reduced once again by nearly a third to 1.34 Ethereum per block. This will happen after the Istanbul upgrade, happening 6 months before the Bitcoin halvening in October of 2019. This would put Ethereum inflation at 2.8%, lower than Bitcoin's for 6 months, but still near its total inflation once the halvening commences. Remember, this is just talk within the community and not guaranteed to happen, but proof of stake is expected to be implemented within 2 years, which will drop Ethereum's total inflation to just 0.5%, much lower than Bitcoin's 1.8%. As we can see from this chart, where Ethereum is the orange line and Bitcoin is the blue line, Ethereum's inflation will be lower than Bitcoin's all the way up until September of 2028, once proof of stake is implemented. These facts make Ethereum look very tasty when comparing inflation numbers, resulting in the coins becoming a store of value. Moving on from inflation, we have to talk about the first mover advantage. Bitcoin has secured that as it was the first cryptocurrency in existence, and that will help it hold its position as number one with the highest percentage of total crypto market share. Although Bitcoin only has the first mover advantage when becoming an alternative to regular money, and thus the medium of payment transactions and store of value. And I don't see this going away anytime soon, with second layer solutions being developed and growing more rapidly than Ethereum, like the Lightning Network. Although Ethereum has the first mover advantage too, in another area, smart contracts. Bitcoin has since its beginning allowed smart contracts, but they are still very limited because they are non-Turing complete. Ethereum, with its Turing completeness, allows a larger range of smart contracts, which can do much more, which is evident in the array of dApps being built on Ethereum compared with Bitcoin. The dApps we need to focus on with Ethereum is the DeFi apps, or decentralized finance apps. Like previously mentioned, Ethereum inflation is currently higher and will be higher into 2020. But what people don't realize is these DeFi apps are helping to combat this inflation. One DeFi app we have to highlight is MakerDAO. Currently, MakerDAO collateralized debt positions have over 2.1 million Ether locked up in smart contracts. This means over 2.1% of the supply is out of Ethereum circulation. And as we can see, the percentage of locked Ethereum has been growing exponentially since the launch of Maker's CDP smart contracts. Then you have other DeFi apps like Compound, which let you supply and borrow Ethereum assets for earning interest on your supplied asset or borrowing assets to use as you please. This is all done in a fully transparent, liquid, and over-collateralized manner, so you know your supplied assets are always safe and available for withdrawal. As you can see from the interest rates, DAI is the most in-demand asset, thus having the best compound interest rate. These DeFi apps are currently locking up 10,000 Ethereum per day with no signs of slowing down. The Turing completeness of Ethereum allows applications like these to thrive. But Bitcoin is looking to make a move into Turing complete smart contracts through rootstock smart contracts. This is a two-way pegged sidechain that will allow smart contracts and dApps which have inhabited Ethereum to come to life on the Bitcoin blockchain. But again, this all comes down to the first mover advantage. And with the growing financial ecosystem of Ethereum, it will be difficult for Bitcoin to overthrow Ethereum in the smart contract and dApp category. Well, viewers, exciting times ahead for both Bitcoin and Ethereum, and I personally am going to be holding both of them and accumulating both of them. Although I do see Ethereum having the potential for higher percentage gains with the massive new financial infrastructure being built before our eyes. Although this could be more risky because if something threatens the old financial system, the powers that will be come to destroy it. Cheers, I'll see you next time.